last few weeks, a question that has most definitely crossed investors' mind is, if global tensions continue to rise, what does it mean for India? And more importantly, what could it mean for my portfolio? Because the narrative suddenly has shifted from growth and expansion to slowdown, inflation, and even recession. Today in Signal episode 30, let's understand what has shifted due to rising tensions in Middle East and how we could and should respond to that shift as long-term investors. Welcome back to Signal, where noisy markets meet simple, sharp, and sound insights for long-term investors. Let's go back by about 8 weeks. Late February to early March 2026, the narrative around India's growth was clear. India was being seen as one of the strongest economies globally. GDP growth was expected to grow between 6.5 to 6.7%. Consumption remained resilient, supported by strong urban growth. Government infrastructure spending continued to drive the momentum. Markets were positioned for growth and expansion. There was confidence around domestic demand, capex cycle, India's relative insulation from global slowdown. Recession was not even a part of conversation. In fact, India was being positioned as a relative strong growth story in a slowing world. So, what changed? The moment geopolitical tensions in Middle East escalated, the impact was not only direct, they were immediate. Oil prices shot up sharply, trade routes and shipping costs became uncertain, currency pressures that were already present began to intensify, and almost overnight, the conversation shifted from growth to risk. Not because India became weak, but the global environment became fragile. So the real question is, what should investors actually watch from here? India imports almost 85 to 89% of its crude oil requirement. So when oil prices move globally, India feels it almost immediately. Higher oil prices impacts inflation, government fiscal balance, corporate margins. This is the starting point of pressure in the system. Secondly, oil doesn't stay limited to fuel. It flows into transportation, food supply chains, daily consumption. Right now, inflation is relatively controlled, but economists are watching forward risk, not current numbers. This is just a built-up phase, not a crisis. Thirdly, as global uncertainty rises, foreign institutional investors tend to rebalance, putting further pressure on Rupee and intensifying the existing depreciation trend. A weaker Rupee makes imports costlier, adds to inflation, and impacts external stability. This is how global risk transmits into domestic economy. Fourthly, when global trade slows, export-driven factors feel it first. Recent data has already shown some softening in exports and pressure on trading momentum. This does not break the growth, but it surely slows the pace of expansion. Now, last but not the least, in my opinion, this is the most underestimated risk. India's growth story is largely connected with its rural consumption. If fuel costs continue to rise and monsoon turns uncertain, then rural income weakens and consumption slows. And this impacts the broader economy. So what is the consensus among economists? They are saying that India remains structurally strong, but global risks are rising. Growth is intact, but environment is becoming more sensitive. In simple terms, not a slowdown story yet, but caution phase has begun. So what should investors do in times like this? In times like this, when inflation risks are rising and uncertainty around cash flows, investment income, and future opportunities are building, it's time to step back and ask right questions. Is your cash flow structured well? Do you have enough contingency in place? Can your income absorb the expense rise? And most importantly, how can your past investment support you today? And if possible, stay invested with your SIPs and long-term investments to benefit from lower entry prices. Reduce your contributions only if absolutely necessary, but don't react emotionally. And if you're unsure, seek the right advice from a CB registered investment advisor and make informed decisions. In the last over of a high pressured cricket match where both teams have equal chances of winning captain is generally the one who responds, observes, reads the situation, leverages the right players, adjusts the field, and plays to both strengths and weaknesses of the opposition team. India's growth story has not changed overnight. In fact, it remains intact, driven by young population, consumption, and strong domestic fundamentals. But in a shifting global environment, it's important to take a pause, separate facts from reactions and sentiments, and think with clarity. Mute the noise, focus on what truly matters, seek the right advice, and make informed decisions. Because in times like this, clarity is more valuable than certainty.